We're on the floor with Jim Cramer, who's answering your social media questions. And Jim, we have so many questions about the Fed, and we've got people asking about stocks. I'm going to run this by you. People are asking, what happens to FANG when the Fed raises rates? What happens to transports? What about big pharma and biotech?
Okay, well, first, I don't want a rate hike. There's a lot of misperceptions on Twitter that Cramer says it's time for a rate hike. That's completely wrong. It's just false. I don't think we're ready for a rate hike at all. I'm saying that the forces that want rate hikes on the Fed will prevail given the fact that employment is so strong. China's no longer as much of an issue because the Chinese stock market has come back, and Europe is doing its very best to reboot. The problem is these are all doing on the back of the dollar, which is going to get very strong, and we've had a real downturn in retail. I think we've seen peak autos, and we have a problem in manufacturing. So the first thing I want to say is that I don't want a rate hike. Second, the vast majority of stocks will go down on a rate hike. You'll hear a lot of people who say they won't. The problem is that we've been in this vast multi-year bull market in bonds. That will reverse if the Fed starts raising rates, and so you'll suddenly have bond competition. So the ones that are really going to be at work, that are most dangerous, are the consumer product stories, the real estate investment trusts, the utilities. They will all go down. Banks will go up because they have these gigantic deposit base. If you have superior growth, historically when rates go up, superior growth after getting hit on a rate hike then bounces back further. There'll be far fewer stocks that I will be talking about that are in an uptrend. And again, I reiterate, those who think that I'm saying we need a rate hike do not understand where I'm coming from. I'm saying we're going to get a rate hike. We do not need a rate hike.
All right, we got it. Now, Apple, what's up with that stock today?
Okay, Apple this morning, Credit Suisse came out with a piece which just said the supply chain is showing great heaviness, which means that they're having an order problem. We just heard from Apple, we just heard from Skyworks, we just heard from these companies, and I am questioning whether that is a good piece of information or not. Apple has been always very cagey with its particular supply chain knowledge, so those who want to sell it, you're playing into that exact game that I'm always telling you not to, which is the trading game. Can you really get in and out of Apple? Most people at home can't, so I'm suggesting not to do it.
Couple on retailers here. Footlocker, should I sell before earnings? Retail's not been so good lately. And also, what's going on with Under Armour?
Okay, I remember the weather is playing real havoc. Under Armour has a lot of clothes that keep you warm when it's cold. Well, it's really warm, so those are not the right clothes. Footlocker has had such a big run. I would ring the register in some of it. There's no reason to be really long Footlocker into earnings.
One viewer mentions you talked about Chevron and Exxon. Can you give some thoughts on BP?
Okay, BP is a challenge company that does not have the wherewithal of Chevron and Exxon. If we have a very long-term, longer situation, I think Dudley's a very good manager. Exxon and Chevron have moved up far too much. I'm not a buyer of those companies at all. But as they come in, if you want an oil, then you want to look at Exxon because Exxon is the least sensitive. If you want the most sensitive oil that has a yield, that's Occidental. I do not think oil is going to spike, but I don't think oil is going to 30s.
All right, let's go to China next. Any new thoughts on Alibaba?
Alibaba's Singles Day tomorrow. We've got an interview with Squawk on the Street with Jack Ma. Let's see what he says.
And finally, what about China Mobile, symbol CHL?
I don't recommend any Chinese stocks because the Chinese market, we have learned, is completely manipulated by the Communist Party. And the idea that you think it's a free market is just extraordinarily wrong. Believe it or not, Donald Trump has an excellent piece in today's Wall Street Journal about the fallacy of thinking about China as an actual market. It's a market that's run by the Communist Party. Why do I have to be involved in the market run by the Communist Party when we've got the greatest free world market right here on Wall Street?
And that's where we are now. Jim Cramer answers your social media questions every day. You'll see him on Facebook. He's on Twitter at Jim Cramer News, hashtag CramerQ, and he's back.
Hashtag CramerQ. And I'm going to try to do both Periscope before Mad Money and a Periscope after we do Squawk on the Street. That's a great time to ask me about anything that I said on Squawk on the Street, and we'll be able to be more interactive. Now, people who know me and know when I created TheStreet.com 19 years ago, I believe in interactivity, and I believe in the individual investor. I am not an ETF guy, and I'm not telling people to put their brains on hold or give it to a hedge fund manager. So when you see something that you're curious about in Squawk on the Street, we will do a Periscope. You got about 5 minutes between when the show's over and when we do it, and that will be the way that you can ask questions about what I just did on Squawk on the Street. At Adam Bain, at Jack, at Anthony Noto, I hope you just heard me. And Chris Sacca, of course, who is an inspiration to me and is so fabulous.
Jim Cramer, he's everywhere. Social media, TV, cable, we can't get enough of him. I'm Rhonda Schaffler for The Street.
To get more of Jim Cramer's investing ideas, as well as a peek at other stocks he owns in his multi-million-dollar charitable trust portfolio, subscribe to Action Alerts Plus. Sign up for Action Alerts Plus at getcrameredge.com. That's getcrameredge.com.